What is going on, investors? Another eventful day in the stock market. Coming off a 3-day weekend, sellers came out in force today in the stock market. You see the Nasdaq down 4%, the Dow down 2.25%, and the S&P 500 down 2.78%. Some of the biggest stocks in the market had big declines today. We're going to go over Apple, Microsoft, and everybody's favorite stock, Tesla, down 21% in one day, basically going into correction territory all in one trading day. If you want to see some of my videos on these stocks, I'll leave some links down in the description below. Go through the comments. There was tons of people in that video saying, oh, Tesla won't get below 350. It won't get below 380. It'll go back up to 400. Here we are at $330. Exactly what I predicted several days ago on Tesla. We formed a topping pattern here. We were going to come down to this level. Look, I had these levels in. You can go look at the videos. I had these levels in before this trading day happened, and notice the stock comes right down to the level. That's exactly where I was having this stock come down to. So we'll talk about Microsoft, Apple, and Tesla. We'll jump into the charts briefly, and we'll jump into a little bit of valuation discussion as well. So Apple, you see here, down 6.73%. We have some after-hour trade here. Wouldn't surprise me if we bounce back a little bit. This was a big decline in Apple. Microsoft down 5%. I have tons of people in my videos. I've been trying to get this stock in the sub $200 range. Tons of people saying, oh, it'll never get there. I'll be an old man by the time it gets there. Here we are, $2 away from it. It was down 5.4% today. And again, I just did a video on Tesla where tons of people were saying I would never touch it in the regions that I was looking to buy it at. And lo and behold, the very next trading day, it comes right down into where I was looking at for Tesla, down 21% in one single trading day. This is on the heels of several other declines in this stock. This stock has gone from over $500 per share down to $330 per share in less than 5 trading days. Now, from a valuation perspective, these stocks, in my opinion, are still a little stretched. From a price to earnings trailing 12 months gap basis, Apple's trading at 36 times PE ratio. Look at Apple. You wonder, well, is that high? Is that low? Well, just compare it to Apple. You should all be doing this when you're investing in stocks. Compare it to itself. Forget trying to compare these companies to other companies because it's not always a direct comparison. Apple, just compare it to itself. Look where the PE ratio is right now. This is a 10-year chart here. We can max this out if you guys want to. This is a long time that Apple is now trading way over its price to earnings ratio. We see here we are, this 10-year chart, or the max chart's not as good as the 10-year chart. That's really all you need to see, is that this stock is trading at a 10-year high from a price to earnings basis. That is really stretched. Honestly, I wouldn't really think about going super long this stock until we came back down in here, probably between the 20 and 30 PE ratio. So you still have a ways to go before, in my opinion, this stock becomes relatively well valued. Now, Microsoft is trading at 37 times. You're probably wondering, where's that? Well, Microsoft is sitting kind of in a range. Microsoft will occasionally pop up here, and it's popped up here, but it's gotten rejected. Every time the stock has peaked up over this 40 PE ratio or gotten close to it, the stock has gotten rejected, and I think we're seeing the same thing. I think a more comfortable range is in the 30s, maybe low 30s. Microsoft is actually approaching a zone where I think it's interesting to buy. I'll get to more of that when we get to the chart. Now, Tesla obviously is trading at 1,000 times price to earnings ratio. I don't think that's necessarily a great way. This is an astronomical PE. I'm not saying you shouldn't pay attention to it, but they're still relatively young, especially compared to Microsoft and Apple in terms of their product line, in terms of how long they've been a company. So I tend to look at price to sales with Tesla. So we've got trailing 12 months price to sales with Tesla. And again, we are at an all-time, close to an all-time high with Tesla. It obviously has come down huge. The stock price, that is, has come down huge. And so obviously the price of sales is going to come down as well, since they haven't announced any new sales. I would look for a sales ratio down in here in the 10s, which is still quite a bit lower than where we're at today. So that's Microsoft, Tesla, and Apple, I think they're all still overvalued from a traditional valuation metric. Now, from a chart perspective, this is where you're going to get really good insights into what other investors are thinking. Now, so the indicators I have in here is the bottom is a MACD. When I talked about these stocks last week, I talked about how they were all rolling over. We're on a daily view here. They were rolling over. I never, ever, ever buy stocks when the MACD is close here to a high and then it rolls over. The stocks want to go down. And if you couple that with an RSI, they want to go down even more. When you couple that with a third indicator, they were way overextended over their moving averages. This bottom moving average is a 50-day. I think this is an 18-day and this is a 9-day moving average. These stocks were way over it. Now we have our moving averages turning negative. MACD is still negative. It's still a little overextended. RSI is finally bottoming out in Microsoft. It's coming down to a zone where I really like this stock. $200, I say 180, 190 to 200 is a zone where if you feel like stepping in here, buying the dip, Microsoft could be a decent play here. We're underneath this 50-day moving average. Eventually, these moving averages will provide some resistance going up. I wouldn't expect these stocks to do just a fancy V-shaped recovery like they did back in March here. These stocks have broken down quite a bit, and I'm going to wait till this one pulls back into the zone. If it doesn't pull back in the zone, look, it doesn't really matter. I'll move on to the next stock. Now, the next stock we're going to look at is Apple. Again, another stock where I told you last week the MACD was rolling over, the RSI was rolling over. The MACD has not even bottomed out yet. When this kind of gold candle or this gold trend line turns positive and then crosses this blue one, that's when it turns positive. I don't necessarily think you need to wait until that time, but take a look at our crash back in March with this stock. The MACD bottomed out and then it crossed right here. You can see this gold line crossing the blue line. What happened? This was it wasn't the absolute bottom of the crash here in Apple, but you would have got it here at about $63, $65 per share and obviously made a ton of money out at that. So obviously our RSI kind of bottomed out or close to a bottomed out there. And notice these trend lines. The 50-day moving average started turning positive here. Notice it's negative, negative, negative. It flattens out and then goes positive. I don't like to buy stocks until the moving averages start to turn positive. Take a look here. Our moving averages turning negative, rolling over. The 50-day is still up. So that's a positive for Apple. The RSI is starting to bottom or start to reach a bottom. That's a positive. But this stock is gotten so close to my zone. I've literally had trades set up in my accounts where I'm trying to buy Apple of right here at this 109. I'm thinking this 109 area might be a decent spot. That's where I would start a position, but I wouldn't be aggressive buying here. So if I want $1,000 in Apple, I'd probably only buy one share, maybe two shares at this level, because once it crosses down below this 108 level, the probability of it coming all the way down to 100 increases because you have quite a bit of gap here. This is probably when they announced the stock split. A lot of amateur traders jumped into the stock thinking it was a positive catalyst, but they are now getting taught a big, hard lesson that is not a reason to buy a stock. And so I think this stock could come into between the 100 and 110 range. Anywhere in this zone, I kind of like Apple for a longer term perspective. I'd also expect if you're kind of swing trading this or trading it, it probably will want to try to bounce out of this level. Whether it holds this level, I don't know. I'd be more aggressive buying it down at this $100 per share since you have a little bit more demand for shares then. Now, finally, Tesla has had the sharpest move, again, down 20% today. And I think even in the after hours, we're moving. It's not bouncing much at all. So Tesla started the day up here right around this 18-day moving averages. These moving averages have turned negative, just like I told you last week. The MACD was turning negative. The RSI was trending in the wrong direction. This stock was going to head lower, and I told you guys that on a video last week. The short-term trend is down. It is ugly. Now, unlike Apple, which is still well above its 15-day moving, I wouldn't say well above, but it's, $16, $17 above its moving average. Microsoft has traded below its 50-day moving average. Tesla is sitting right on it. Take a look. So we closed the day on an 18-day moving average here, and then we came down here today. That was last Friday. Here's Tuesday. We're sitting right on this moving average, and take a look. Tesla has finally reached a zone where I would maybe potentially think about coming back into the stock. You got between 285 and 330. Again, you can check out my videos on Tesla that I posted last week and just read through the comments. There's dozens and dozens of comments in there of people saying it would never ever come to this zone with no support, no justification, where I was giving you full on justification why this stock would likely come down into this zone. So what's going to happen with Tesla? I think it could potentially bounce off this 50-day moving average. But again, we're still way overextended, at least on this daily view. On this MACD, this RSI has started to bottom out. But what tends to happen with stocks is when they make this mammoth run up to the top, sometimes the mammoth run to the downside overshoots a little bit. But finally, Tesla has moved into a zone where I certainly think if you want to justify stepping in here and buying the dip, this is the first level where I would legitimately buy a dip. Okay, a lot of amateur investors, the 1 or 2 red candles with Tesla, they're in there buying the dip. And maybe for the last couple years that has worked, but things change and you need to look at the indicators and let them know what they're telling you. And the MACD was rolling over, the RSI was rolling over. It was not a good time to step in there and buy the dip. When these things start bottoming out, then maybe it's a good time to buy the dip. This 50-day moving average is still positive. The stock is sitting right on it. This could be a decent place to buy a dip. I think you're going to have demand for the shares in here. Now, the only problem with Tesla is you're going to have a lot of bag holders, especially amateur sellers, that are holding this stock up here, praying that it bounces up back up into these levels, and they're going to be quickly trying to sell their shares to just break even or lose a little bit less than they've already lost as the stock maybe rebounds a little bit. So you just want to keep that in mind. I don't think, again, like this is going to be this quick V-shaped recovery like we saw in stocks back in March, although Tesla didn't bounce back super fast back in March. It's really just rallied on kind of speculative buying, split. Because it does a split, people are making the case that battery day and orders due in China, orders coming in next month. Guys, these are really amateur reasons to buy a stock, okay? A lot of that information, battery day, it's already priced into the stock, okay? That is not necessarily going to move the stock one way or the other. Things that are going to move the stock is the supply and the demand on this price chart, and we're still seeing pretty weak supply here. Although, again, Tesla has moved down to an area where I think it's kind of interesting. So there we go. Apple down in the after hours are pretty much flat, down 6.75%. Microsoft getting into a zone. Tesla is in the zone where I think it's probably going to want to bounce off this level. Whether or not it holds that level, I don't know. Apple is not there yet, but it's getting close. I'd be really excited if it got anywhere between 100 and 110. And Microsoft's a stock I've been trying to buy a long time, right at these tops. I would like to get it right at here, 190. Have dozens of comments on my channel saying I'd never, ever get it here. Here we are, $10 away. What's that, about 5% move for Microsoft to get right where I want it? I'd probably be a little bit more aggressive with this and come in here and start buying at 195, maybe even 200 even. Whether or not I get my chance at that, we'll see. The indicators still appear slightly weak. It depends on what stock you're looking at. Apple still seems a little overextended. Tesla has made a big move down, and so that one definitely seems the most interesting to me at the current time. So there we go. There was Apple, Microsoft, and Tesla all crashing over the last couple days. If that doesn't get you excited, you have the wrong mindset. If Tesla put Model S's 50% off, if your neighborhood put houses 20-30% off, if Nike ran a 30% off sale on all the cool Michael Jordan shoes, you'd be excited. And so when stocks start selling off and go on sale, you should be excited, not disappointed. If you're disappointed, you're doing things completely wrong. You need to have an adjustment in your strategy. There we go. Microsoft, Apple, Tesla. We'll see what the next days have to come. Good luck with your investments.